First, I would say, including anybody that wants to make forecasts about when the start of a recession happens, they simply don't know right now because it's really hard to read the tea leaves in this market. And so the question that everybody, including me, has every day when I see a correction like this, when I see Walmart down 20%, for example, which is a bellwether stock, if I'm an opportunist, I might put on a position. But what I'm doing right now is I'm waiting. I'm waiting for the big event, as I call it. And you get these events, and we talked about it. That day will be an interesting day to put 130 or positions on. It'll be a day of panic. We'll be down somewhere between 2,000 and 3,000 points. And yeah, it's horrible to talk about it, but that actually is very healthy, very, very healthy.
Shark Tank star Kevin O Leary, also known as Mr. Wonderful, has predicted that trillions of dollars will flow into cryptocurrencies, particularly Bitcoin. In addition, he said Bitcoin mining will save the world. Hello and welcome to Smart Tech Ideas. In today's video, Kevin O Leary, who is the chairman of O Shares Investment, gives exclusive updates about recent volatility and instability in the crypto markets. He also reveals the chances of a Bitcoin-backed ETF happening in the US and his long-term bullish outlook for Bitcoin. Make sure to stick around till the end of this video where Kevin O Leary reveals whether the market is actually bottoming or is it a fake signal. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video.
It usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this, or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing. And that's happened many times before. Have never seen this kind of a market, so they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And again, you know, I feel sorry for them, but I think it's very healthy when that happens. And the trouble with this correction is it's a slow grind down 1 to 3% a day, and you don't really bottom till you get that flush.
Additionally, Kevin O Leary is taking stock of the altered crypto landscape after billions of dollars were liquidated when two large-cap digital assets collapsed earlier this month. O Leary says that the demise of the Terra USD algorithmic stablecoin and its affiliated Terra, Luna, is a painful part of a growing industry. O Leary next observes that US dollar coin, which is owned by the financial services company Circle, did not falter like other so-called stablecoins during the recent market crash. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stablecoins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. So that's signaling that that type of stablecoin is favored by institutional investors versus the others which look like they're a retail product. The popular investor also points out that other speculative niches within the world of blockchain have also seen price drops, such as non-fungible tokens, NFT.
There is some institutional ownership in the Canadian market by Canadian institutions because they can use the ETF and equity mandates, but that's Canada. They were the first to allow an ETF with Bitcoin as the underlying. They also allowed an Ethereum ETF, and so those are positioned, but they're inside of equity mandates. The actual ownership of Bitcoin itself remains elusive to the institution because of their own compliance departments. And on top of that, no infrastructure for compliance. There's no way to market into any of these systems the price of Bitcoin or whether it's levered or not during the day, the way you can with stocks that have been treated that way for decades. So there's so much work to be done. I think this is actually a maturation process for the crypto market. There's two basic baskets of crypto projects. One, highly speculative tokens, and you could say UST and Luna certainly fit that because they've been repriced dramatically. Highly unlikely in the context of stable coins will they ever return to their old prices because people have figured out a stable coin should be stable. And that means it has to be backed by something of asset value. You can note that USDC did not correct that way. In fact, during the period of this mass correction of other algorithmic or other quantitative or speculative stable coins that really got crushed, Circle, the company that issues USDC, was able to raise $200 million from Fidelity and $200 million from BlackRock. That's unprecedented in equity for the company. So that's signaling that that type of stable coin is favored by institutional investors versus the others, which look like they were retail products. So you've got all this speculative stuff. The NFTs have corrected. The Las Vegas side of crypto has had a nightmarish correction. And I think that's very good in the sense that it helps separate the wheat from the chaff, or the cream from the milk, if you wish, whatever analogy you want, because the traditional projects have remained relatively stable. Sure, they've had a correction, but it's not uncommon each year for Bitcoin to give up 50% of its value, and that's certainly been the case here. Ethereum, same thing. And so that's the volatility that will be inherent in crypto until there's policy.
Kevin O Leary, whose portfolio is 20% dedicated to the blockchain sector, believes the cryptocurrency space will eventually become the 12th sector of S&P 500 index. He said it at this year's DC Blockchain Summit on Tuesday. Mr. Wonderful pointed to crypto's productivity in terms of faster transactions and less fees compared with traditional wire transfers.
It's a long way away. That's not what's going to happen first. I think what's going to happen first is we're going to see policy on stablecoins. And both the Haggerty bill and the Toomey bill are very clear about what they want in the regulatory environment on stablecoins. They want a 30-day audit in both cases, and they want all the underlying assets to have duration of less than 12 months. And that makes sense to me. And I think once they put that law into place, which is an easier bill to pass after the midterms. Nothing's going to happen until after the midterms. Biden is not interested in discussing crypto when his poll ratings are, whatever it is, sub 31%. That's not a place he wants to go. Well, that was 10%, of a pre-decline for Biden. I mean, the market's correcting. Biden's facing, close to double-digit inflation. People are getting gas at the pump going into the driving season at unheard of prices the last 20 years. The price of protein's up 20 to 40%. He's not sitting around worrying about crypto. So you got to think that through in terms of policy. So nothing's really going to happen. Plus, you've got a lot of different proposals coming out of the SEC around climate change and crypto and Bitcoin mining and right. All that stuff. So it's a very volatile situation.
O'Leary claims that Bitcoin predictions have never been accurate, adding that no one was capable of accurately forecasting its volatility. The assumption that Bitcoin was going to be a hedge against inflation was just flat out wrong. He predicts that Bitcoin will remain volatile. He compared it to Amazon's performance over the last 15 years. O'Leary has reiterated that the narrative about Bitcoin's institutional adoption is not true since the U.S. Securities and Exchange Commission is yet to approve a Bitcoin exchange-traded fund. The ownership of Bitcoin by institutions remains minuscule because of their compliance departments.
I remain bullish on crypto from the perspective of productivity. And so I think if you're buying projects, and I've always said this, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Helium software, Pollen is software. All of these different projects around different sectors of the economy. Solana may be better ultimately for transactional speed because Ethereum is pretty slow. So we don't know which one of these projects is going to win. But the whole premise is that you want these for financial services. And I still believe that in 10 years, crypto will be the 12th sector of the economy, but all the existing tokens will not exist. There'll be many that just go to zero because they were highly speculative, they were fun, they had no real intrinsic financial services value. But if you were to ask me about USDC and say, look, where's the value of that? Well, first of all, you can stake it or loan it at a 4% rolling annualized yield every 30 days, and that's valuable in inflationary times. Secondly, it is a highly effective payment system because I am now accepting payment for goods and services in USDC and very often not converting it back to fiat because I'm simply leaving it in my Circle account and rolling it into these 30-day contracts. I cannot buy more than a 3% weighting in any mandate of USDC because my regulator, or my compliance department, I should say, treats it as a highly volatile equity, as evidenced by what happened to Luna, what happened to UST. So they're looking at that, not differentiating the difference between those two tokens. So they're saying, look, you can put on a 3% weighting. So in the case of that particular mandate, that was $7 million. So he moved the $7 million out of the account into a USDC account. And within hours, I got a phone call from the bank saying, what happened to that $7 million? Why didn't we get a chance to bid on it? I said, okay, bid on it. Right now, I'm staking it out at 4% for 30 days. Right. They came back, gave me double B corporate credits for 3 years at 3%. And I said, why would I ever do that? You're not competitive. You've got to meet me at 30 days for 4%. And then they sent me all the articles about the correction of Luna. And I said, Luna is not USDC. No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in. Margin calls are called in, shorts, are bought. They basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%, and that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated, and so it may be something else, a financial services company, or there was some rumors about Coinbase that turned out not to be true. But you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet, and they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing. And I'm waiting for that to happen, because we're getting close to a bottom here.
Bitcoin has been weighed down by rate hikes in the US and global inflation concerns, and has traded similar to a risky technology stock in the past few months. Data from the on-chain analytics tool Sentiment suggests Bitcoin prices may see a bottom at current levels and appreciate in the coming weeks. Some analysts pointed out that institutional investors have taken out more money from the ecosystem than poured in funds, suggesting a generally bearish sentiment that may have also contributed to falling prices. So, do you think that Kevin O Leary is right about market bottoming or not? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.